As we approach the end of the year, what should we be thinking about? Here's 12 things to do before 12/31. The very first one, this one is so key, is get an understanding of what your tax return is going to look like before you actually file it. So this is working with your accountant, your CPA, maybe it's even putting something in TurboTax yourself so that there's no surprises, no sticker shock when you actually file your return. And each of these other ones will impact what you do. So knowing where you stand currently and whether or not you should do any of these other 11 will be really helpful. So that's number one. Number two, after you've put the analysis together, you'll know you're on track or you're behind with your withholdings or quarterly payments. So maybe it's making some adjustments now while you have a runway of a month or two or a couple pay periods to adjust your withholdings on your paycheck or send in another quarterly estimated tax payment so that there's, again, no surprises, you don't have a large balance due, or at the same time, maybe a large refund that's locked up until you file your return. The next one, look at the benefits that your employer is offering. If you haven't contributed yet to your 401k, maybe it makes sense to start that, or at least get to a point where you reach the company match. So that's free money that you're not leaving on the table. IRAs, this is both traditional and Roth IRAs. Maybe it's putting some in the traditional, some in the Roth, or a combination of the two until you reach your full amount. So if you're budgeting, it's probably easier to do this by the end of the year, but this is one that you actually have until April 15th after year end. So you don't have to do it by 12/31, but if you're budgeting, you like to stay on track, doing it before year end is great. Roth conversions, this is where you're taking a pre-tax account, like a traditional IRA, and transferring those assets or investments to a tax-free, an after-tax Roth IRA. So it's called a conversion. And you have up until 12/31 each year to accomplish that. Gains and loss harvesting. So this is looking at your investments, especially in your taxable account. What have you sold at gains this year? And if you have anything that you can sell at losses to offset that, do it. Otherwise, if you're in a really low tax bracket, you can take advantage of the zero tax for cap gain harvesting. So you want to sell things at gains to fill up some of the lower brackets and do it at a zero tax rate. Number 7, RMDs. So if you're in your retirement years, you're 70 and a half plus, maybe now with the new rule, you're 72, you have to start taking money out of those IRA accounts. If you're no longer working, that would include your 401ks. If you're still working, you can wait to take those RMDs. So this is money that has to come out of these pre-tax accounts by the end of the year. So those are called RMDs, or required minimum distributions. 8, this is one where it's real easy to get behind on supporting the charities and organizations that you are behind. So look at what you've done year to date. Are you behind? Do you want to catch up? They need you, especially now. So make those contributions, make those donations. This can be in the form of cash, so a check. This could be in the form of non-cash, so like clothing or household items to Goodwill, Salvation Army. This could also be with appreciated stock. So if you have some investments that have really appreciated over the years, you can give those and do it in a real tax efficient way. It can also come from your IRAs. So if you're 70 and a half or starting to take those RMDs now, you can do that directly from your IRA and send it to the charity. Those are called qualified charitable distributions. We have a whole video on that as well. HSAs, so these are health savings accounts. Money that you're putting into a specific account for medical expenses. You can do this through your employer, and that's the preferred way because it reduces all your payroll taxes, or you can do it personally with a check. So this is one where you have until the end of the year if you're doing it through payroll, or you have until April 15th of the following year if you're doing it by check on your own. FSA, flexible spending account, another medical one. This one's known as a use it or lose it. So you've put money in, you have until the end of the year to use that money up or it's gone. There's a few types of plans though that allow $500 to be rolled to the next year, or there's a grace period. But essentially, you want to use it while you're thinking about it. So use it or lose it. So if you have some medical, maybe you have some procedures that you're planning on doing early next year, and if you've met your deductible, get it done now. Get it done while you have that FSA to use. The last two here are gifting. So if you want to help a family member or a friend, you can give up to $15,000 a year per person without any tax implications, either to them or yourself. So as long as you stay under that $15,000 per person per year, there's no gift tax requirements that you have to file. And that last one, 529s. So whether you're a parent to be, or a grandparent, and you want to start setting up some education funds for your kids or grandkids, do that. Here in Illinois, and certain other states have this, if you put money into that account, there's a state deduction that you get to claim. It doesn't have any impact on the federal side, but each state has some different thresholds that have to be met, but allow you to take a deduction too. So these are 12 things to do before 12/31. We're going to provide a link so you can download this list and use it as a checklist, go through to see which ones apply to you, which ones make sense, maybe others not this year, but next year. So again, put together a tax analysis so you know which of these would really impact you. If you have any questions, we're always happy to help.